The most important determinant of your success in trading or in your personal life is your self-efficacy beliefs. It is not your unique setup or scan or entry or exit or position sizing that can explain your success. One thing that clearly separates traders who succeed and stay in game for decades is strong self-efficacy beliefs. Almost every successful trader I know of has developed their unique style on their own. Because of self-efficacy beliefs, you've figured out profitable ways to trade. No one gave you a 1,000-page manual on trading or held your hands when you were taking baby steps in trading. You figured out things for yourself, and you continue to tweak your approach to date. The days, months, and years you spent trying out different things and failing at it or losing money further enhanced your beliefs in your own capabilities. Once your self-efficacy beliefs about trading change, things start to happen. Your self-talk must change to, hey, I can do this, hey, I don't have all the answers but I am confident of finding the answers, and hey, I know how to bounce back from setbacks. You develop a unique style after several efforts. Unless you work on self-efficacy, you will find many inhibitors and will be constantly dissatisfied with any method, guides, videos, or instructions, or site. You will constantly chase new methods, new scans, new claims, new gurus, new newsletters, and so on. You need to put in a lot of effort to understand and internalize key concepts like equity selection, entries, exits, risk, reward, and then put it all together. In the process, you will have several setbacks and false starts. If you have enhanced self-efficacy beliefs, you will persist in face of such adversities. Learning to trade is not an easy task. It is one of the most challenging tasks you would handle in your life. Some are lucky and they find success instantly. For rest, it is a big battle. People with a strong sense of self-efficacy beliefs approach difficult tasks as challenges to be mastered rather than as threats to be avoided. They have greater intrinsic motivation that helps them to engage for long periods in activities and helps them overcome repeated obstacles. They do not have a discipline problem. People with high self-efficacy beliefs set themselves challenging goals and maintain a strong commitment to them, and heighten and sustain their efforts in the face of failure. People with high self-efficacy beliefs quickly recover their sense of efficacy after failures or setbacks and attribute failure to insufficient effort or deficient knowledge and skills that are acquirable rather than external circumstances. This is critical in trading. You should not be overly excited by profit on a single trade and same way not get depressed by loss on a single trade. At the end of the day, trading is a probability game. High self-efficacy helps create feelings of serenity in approaching difficult tasks and activities where the outcome is uncertain. If you have low self-efficacy beliefs, then often you believe that things are tougher than they really are. As a result, this belief fosters anxiety, stress, depression, loss of discipline, trading, and a feeling of being lost. You are unable to solve your own trading problem. Self-beliefs can also create the type of self-fulfilling prophecy in which one accomplishes what one believes one can accomplish. This further enhances self-efficacy beliefs. This leads to higher performance, which, in turn, leads to higher effort and higher accomplishment, which in turn further enhances self-efficacy. Constantly challenge your self-efficacy beliefs. Constantly work on your self-efficacy beliefs. Challenge your existing beliefs. Examine your current beliefs. Enhance your self-efficacy beliefs. If you do that, then you will achieve your trading goals and you will not need alerts or alerts with sound effects. Short-term moves are easier to predict. You need fewer factors to consider when looking for an 8 to 20% move or a 3 to 5 days move. Long-term moves are more difficult to predict and require more factors to be taken into consideration, and require more skills. Much of the advice on trading you will find comes from traders trying to find longer-term moves, wider stops, adding to a position, letting your profit run, do not sell early, phase 2 moves, and long bases are all aimed at traders looking for longer-term hold trades. Short-term trading is a fundamentally different game than longer-term trading. Short-term moves are more predictable. Your time frame of trading is the most important decision that will determine how fast you can become profitable. If a setup you select produces say 50 trades a month, you will have a lot of feedback on what is working and what is not. If the setup you select has 10 trades in a year, then you will need 5 years to have enough experience to understand and perfect what works. Long-duration trades take months or a year for you to get feedback. As a result, learning curve will be longer. Very few traders think through this issue at the start of their career, and as a result, spend years going nowhere. The ability to solve your trading problems makes you a profitable trader. Setup selection is a key decision. Once you have the setup selected, things start to happen. The goal for new traders should be to significantly shorten the learning curve without losing starting capital. Once you understand momentum burst on daily timeframes, the same pattern can be used on the lower timeframes. Creating a watch list of stocks likely to break out and monitoring them during the first 30 minutes of open allows you to enter many breakouts early. Early entry on breakouts can reduce risk and increases profits as you also capture the first day gains, and stops can be made break-even soon. Stocks with high short interest often make explosive short-term moves when they break out. Shorts scramble to cover, leading to big buying stampedes.